Hey, what's up? Welcome to DGen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Polestar Automotive, ticker symbol PSNY. Here looking on the weekly chart, and as we can see, over the course of this week, only having 3 days down, 2 more to go, Polestar is up almost 40% over the course of the week, having gone up just today almost 23%, closing the day at a price of $1.83. Why is that? Well, that's because they have secured a $1 billion investment in their company, so it does seem like pretty good news. Also, some technical things happen that I do want to go over, but we're going to go over that stuff on the daily time frame, and I'm going to throw up some drawings and take you through what I see. So the last video that I did put out was on Sunday, so we've only had 3 trading days following that last video. But the reason why I wanted to do this video is A, because you guys have been requesting it, so thank you for that. Also because earnings are coming up tomorrow morning. And so if I do flip over to their website, we can see that their Business Outlook update webcast, or their earnings call, is happening tomorrow at 8 a.m. Eastern. And unfortunately, I do have a dentist appointment that I need to go to at 8:30. But what I will do for you guys is I will start the stream, get it set up. I'll hang out for the first half an hour, and then I'm going to leave it in Ed's hands. So you'll have to hang out with him for that second half an hour of the earnings call. He doesn't talk much. He won't be able to give you many thoughts on technical analysis because he mainly just thinks about bananas. But, it will be there. So please do tune in for that. It's kind of an experiment for me, leaving it in his hands. Hopefully it goes well. I do think it will. But anyways, back to the chart. So, what I went over in last week's video, or really on Sunday's video, was that it looked like we were getting a fake out, a test of the bottom of this falling wedge, which we had previously broken out of. And also I should note that it's possible this is not a falling wedge. It was pointed out to me that it might be either Wyckoff accumulation or distribution, which I have not studied enough yet to be able to say. But to me, this looks like a falling wedge, and it looks like we broke out, but that was a fake out, and now we're breaking out again. We did get a fake out, like I said, to the bottom, coming down to this Fibonacci level based on this yellow retracement, the 2618 extension at a price of $1.31. And so that's actually what we closed at on last Friday, February 23rd, closing at a price of $1.31 and actually hitting a low of $1.30. And so from that $1.30, I've done a new retracement from the high here that was hit on February 12th, coming down just to give us some other levels to look at as the price has gone up a lot. And we also have broken out of the wedge, as you can see. But I do think, it might cool off a little bit. We might settle a little bit lower than current price before continuing higher, but we might also just go higher depending on, how earnings are received. Since it's gone up over 20% today, I suspect it'll cool off a little, so do prepare for that. But before I get into where I think it might go, let's go over where it's been and how the levels relate to where it's stopped and, how they can inform us into the future. And so basically what we see from this retracement, from the low here to the high here, the yellow retracement, we can see that on Tuesday, February 27th, we hit a high on the day at a price of $1.52, which coincides perfectly with the 1618 extension here coming down from this retracement. So I think that's pretty cool. That did act as a level of resistance. Also, if we look at this retracement, the 236 level is at a price of $1.43.2. And the low on Tuesday was $1.44, so just above that level, less than a penny above that level. So I think that's pretty cool. We also did get a wick above that level, but a close below on Monday. And on Monday, we did make our way back into the wedge, closing above it, and that suggested to me that this was a fake out breakdown and that we were going to continue higher to test the top of the wedge. Unfortunately for me, I wasn't paying attention to this on Monday. It's tough to do, doing all of these videos, having just made one on it, doing work, all of that. So I wasn't able to add more to my position down here. It's a little bit unfortunate. But, from that, it is very clear, it became very clear that we were going to test the top of the wedge. And so today, as I record this on Wednesday, February 28th, in the after hours, after the markets closed, we can see that we clearly broke out of that wedge. At the beginning of the trading today, I was thinking, it's going to test the top of it. It might break out, it might not. Clearly, we blew past the top of the wedge and a number of key levels. And so some of the levels that do stand out to me, some of them, this orange and red line, are from previous retracements. I'm going to leave them up here because they might come back to haunt us. But for now, they're in the rearview mirror. I'm not going to worry about them, as we did get above the low that was hit on February 5th, which was at a price of $1.65, marked by this yellow line here, also coinciding with this purple line that I drew, which was based on the close of that day. February 5th closed at a price of $1.66, so that purple line there is at $1.66. Blew past both of those levels. Also, we blew past this uptrend. And so that uptrend is based on the low here, $1.59, that was hit on January 16th. Also, the pivot point is the low here on February 5th, which was at a price of $1.65. And so from those two pivot points, we get this uptrending level, which served as support as we were forming what ended up being this bear flag, this bearish consolidation right here before the breakdown, which became apparent to us because we saw this falling three methods. Big red candle followed by three green ones stair-stepping up, and then another big red candle. That suggested we would see further downside, and that's exactly what we saw. And so we have broken above that uptrend and closed well above it. We've also closed well above the 786 level from this retracement from the high that was hit on February 12th, coming down to the low of just last Friday, February 23rd. So that 786 level is at a price of $1.74. We closed well above it, 9 cents above it at $1.83. However, though, we did get rejected from two levels, as you might notice. One being the high that was hit here, that was at a price of $1.86, so we closed below it. What we need to see is a close above previous highs. That would suggest that buyers are still stepping in even at new highs, suggesting there's momentum, there's volume, it's going to go higher. We did see a lot of volume today, but not enough to push it past that high and hold. And so that is a level that we need to see a close above, $1.86. But now that we put in a new high, we have a new wick high coming up to a price of $1.99, just 1 penny below this psychological level marked in red at $2 a share. So it's pretty unfortunate that we weren't able to get to $2 and we were not able to close above it, especially because if we look back on Chrome, we can see that for Polestar, the max pain for this week, actually 2 weeks from now, because it's monthly contracts for Polestar, closing the week March 15th, the max pain is $2 a share. So hopefully we can get past that, but I do think there's going to be a lot of resistance there, as we can see. And so my thoughts, after having a nearly 40% move just over the course of this halfway completed week, and 20%, more than 20% over the course of one day, I think that it's going to cool off. But I do think that could be a really good thing. I think that seeing the 786 level here at a price of $1.74, that coinciding with this uptrending level that had acted as support while we were forming a bear flag, that does suck. Now on our move up, we could be consolidating there, forming a bull flag. And so my thoughts are that this is going to return to $1.74. It might be short-lived. And I think from $1.74, short-lived, like just over the course of a few days, like we spent just 2 days at the bottom here. We might spend a few days, maybe Thursday and Friday, testing 174, maybe Monday next week, like we got a powerful move to start this week. We might get a powerful Monday next week to test and close above $1.86, and then perhaps reclaim $2, potentially moving up to fill this gap at $2.15. And just beyond that, from this retracement that I just did, we can see the 1618 extension up here at $2.20.7. So I do think that these are all levels that we could be going to. But we need to be closing above these levels. We need to be closing 2 consecutive closes above $1.99, today's high. And we also first need to be getting closes above 186, which we could not do today, even after a more than 20% move. So, with earnings, it's very, very tough to predict. I'm not going to do it successfully no matter what I do. But I do think that for the health of the stock and its price moving higher, I do think it needs to cool off at 174 for a few days and then start to claim these levels. And ideally, you might notice it, this orange line up here at $2.32.9, that is a level that we really need to be claiming, because getting 2 closes above, because that was the high before this gap down, before the Volvo rug pull. And and then I guess beyond that, 250. And so as far as earnings go, I'm hoping that we can get above $2, but after this move, I think 174 is definitely going to happen. And so what I'm probably going to do, I'm going to probably wait, maybe add around here, maybe add if it returns to 166. But if it keeps going higher, I'm just going to kind of sit back, watch, and wait. But I don't plan on doing too much. I wish I had a bigger position, but unfortunately, I have what I have, and I'm going to hold it, and maybe we get up to 250 by the time I make the next video. But we're just going to have to wait and see. Oh, and before I do close this, I do want to point out that bullish divergence that I pointed out played out perfectly. If I would have paid attention to this on Monday, this was a great signal to buy, because we saw, let's see, let's get it out. Let's move it out of the way of Ed so he's not blocking it. We do see this, higher low in the RSI, and we see an uptick in that RSI here. If I can get the cursor on that, where that blue dot is, that uptick showed us that we did get a higher low, and that really confirmed the bullish divergence that led to this massive breakout. So I just think that's awesome. Technical analysis right there. It's super cool when it goes according to what you're seeing, and with all of these levels converging at the bottom here, this fake out signal, the bullish divergence, that was a beautiful time to buy. I hope you were able to take advantage of it, and I am really excited for earnings tomorrow, and I know Ed is too. He's excited to be streaming it by himself, so do tune in. It should be fun, and those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.